Hi, everyone, and welcome to your Daily 5, hosted by StockCharts. I will be your presenter today, Mish Schneider. Lots to cover, so let's go on with our agenda. We're going to start here with the theme of your best offense is a good defense. So I always like to combine charts with actionable information, but also education so that you understand really not just the methodology, but the philosophy behind it. So what we want to talk about today is A, know the phase that the instrument is in that you want to trade. Make sure that you have a good risk reward before you put on a trade. If something is going wrong, particularly in recent volatile times, you want to cut your losses fast. You want to also make sure that you keep an eye on some of the outliers that influence the market. And then what you should be trading from the long side are the outperformers. We'll take a look at one of that. And then also, if you do want to short at this time with the euphoric conditions that the market is in, to know your time frame with a couple examples there. So let's start with the whole idea of knowing your phase. This is the S&P 500. Right now, no doubt about it, and I've shown this to you before, that this is in a recuperation phase. And if you take a look here at the 50-day moving average, it's actually starting to go up in slope. What we're running into is right here is the 200-day moving average. So that resistance is going to be palpable. We could even pierce it and come back through it. The point is that right now we are running into resistance, and running into that resistance means that we would have to actually confirm for a couple of days in order for us to say we're ready for another leg up. So that's something to be aware of, is that we're still in a recuperation phase, which of course is a hopeful stage, but before we turn into optimism, we want to see it match, at least in the S&P 500. Of course, other instruments are not doing as well, but they're trying, being pushed up along with the big run we're seeing in NASDAQ. And the second thing is, if you do want to go long, particularly now, you really have to understand your risk reward. This is really going to be all about how much you risk versus how much you think you can gain. And the whole idea is to be able to get the best risk reward as possible. So here is UGA. This is the US Gas Fund. I actually featured it last week on StockCharts TV. And I showed that this had come down to the 50-day moving average. And then once it closed well at above the 50-day moving average, we entered this at 1440. This is the kind of trade, I'm not saying it necessarily has to be a stock that is just clearing the 50. It could be whatever major moving average it's clearing. But the idea is that we risked only to 1370 on this chart, on this particular instrument, and we already took some profit. We had the advantage of this gap here at 1650, and now we're holding partial of the position with a good trailing stop, looking for a second target. And that's so important right now. If we go down here, you can see that this is outperforming the benchmark still, and had cleared the 50 at the same time on the real motion, so it was running actually in line with the price. And now, of course, we'll see what happens here if we can get closer to the 200-day in real motion with the 200-day here. That would be a thrilling move, and we probably will have taken a second target by then. But the point really is, don't chase. Be very careful, because one headline can make this market go down. Now, here's the other example of cutting your losses quick. This is CHWY. Now, we got into CHWY. It had been under the 10-day moving average for all of these days, but in a bullish phase, being above the 50-day moving average. And also during this time, it was showing a little bit of underperformance in terms of the benchmark, got up to the point where it could possibly start outperforming, never quite got there. So we had bought this at 40.17. And we had an initial stop, which made sense, also good risk under this 50-day moving average. But we were looking for it to take out the highs and go to a new high before we took a profit. So we waited 1, 2, 3, 4, 5 days. And on this day yesterday, we basically scratched at 40.17. Currently, this is trading a little bit down here under 40, so it turned out to be a good thing. And we're seeing the confirmation here as this is starting to break below the Bollinger Band on the price performance versus the SPY. Now, This is something now is to look at the outliers. The perfect outlier to look at here is the volatility index. And the reason why I'm showing you the volatility index is that even with the run we're seeing in the market right now, this is definitely holding up. Not only in price, here's the low that we had the last time SPY went up to 295, but this time with SPY being higher than 295, we haven't even broken this current low here. What's interesting about the VIX is that it is in a caution phase. However, the slope is still positive on this 50-day moving average, but let's go down here. Yes, it is underperforming here, but you see this long-term moving average right here? This is telling us right here that it's still holding this long-term moving average. So if you started to see SPY, first of all, take out the 10-day moving average, but more importantly, get back above the red line or showing it's outperforming, that would be significant and probably would be telling you that the euphoria is starting to wane. And if we look here on real motion, this too, for a very long time, since the big move had happened down, has been holding its 200-day moving average. So now the question is again, will this start to move up and clear? So keep your eye on the VIX. Just looking at the price action today, if this thing can get back over 34.50 even and hold, that would be a caution for sure. So now let's see what happens here. Where should you go? Well, this is an opportunity to look at things that have been actually outperforming the market, and this is gold, the GLD. Now, gold has not been able to take out these recent highs, but certainly this has been an outperformer above the 10-day moving average, the 50 and the 200. However, in recent times right here, it actually started to underperform the gold a little bit, but it's holding its support. Underperformed the SPY a little bit, but it is sitting here holding the Bollinger Band. So this is going to be a very key area for gold. If gold can hold and take out 165, not only is that a negative sign for the market, it might be a good opportunity if you've missed the boat to get into gold again. And of course, you can see the outperformance here in real motion. And even though it's waning here in momentum, it's certainly nothing horrible. And of course, if it takes out that Bollinger Band, off we go. Now, what about going short? There's a couple of ways that you can look at it. Depends, of course, on your time frame, but you can either look at something like Netflix. Some people like to trade things that are at new highs and are failing, and there's actually a pattern that we call that's called a slingshot pattern. It's when something makes a new high and then sells off, closes the intraday low, and follows through the next day. Currently, this is trading right now at around 446, 447. If it breaks down under this 10-day moving average, you could also see that it's broken down under the Bollinger Band after being above it for a while. If it breaks down under the SPY performance, that's one thing. And again, momentum has been strong, but it could start to wane. So this is one way to go short. Another way to go short would be to keep your eye on something that has been classically weak, and this is the regional banks. If you look at the regional banks right now, yesterday, or I should say Tuesday, it closed under the 50-day moving average. Now it's back above. So there's really two ways to look at it. One would be if it closes back under that 50-day moving average or back under 33.95, you could have a pretty low risk short that way. Or if the market does indeed hold, we have to be flexible these days, and we start to see not only the performance reach back up to the SPY, but also, as we can see here, this is clearing the Bollinger Band on the real motion or the momentum going up. A confirmation or a second close back above the 50 could be a good low risk trade to go long. And that's exactly why we definitely want to say that your best defense is a good offense, and be very quick, cut those losses, be prepared to turn on a dime, and definitely only take the trades that are giving you good risk reward. And that's your Daily 5. Thank you so much for watching. I will see you again soon.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.